Hi, this is Zak Mir from Zak's Traders Cafe with a look at some Bulletin board hero stocks on Monday the 8th of February. Starting off with Strat Aero, and it's been a long wait for a decent signal in terms of the upside argument. Drifted back from the double top towards 9 pence in the autumn, but it looks as though we're in a rising trend channel that can be drawn from as long as goes July with a double bounce for late January and early February off the floor of the channel at 4 3/4 pence. The view at the moment is that really while there's no end of day close back below, let's say 4.6 pence, which was Friday's support, we're looking for at least an intermediate rebound back towards the 200-day moving average zone and the bottom of this December gap at 6.8 pence. The time frame on the move the next 4 to 6 weeks. If you're cautious on the shares, maybe wait for a clearance of RSI 50 versus 46 at the moment before pressing the buy button. Bahamas Petroleum is next, and quite a rampant signal as far as the technicals are concerned here. We had the gap to the upside through the 50-day moving average in December, and then the gap through the 200-day moving average, 1.83 pence this month. So that's really a decent double signal there. And the view is that while there's no breakback below the 200-day moving average at 1.83 pence, we should see a target towards 3.5 pence over the next 1 to 2 months, and any dips in the meantime towards the 50-day line regarded as a buying opportunity. At this stage, only really back below the 50-day average at 1.68 pence, and this May rising trend channel at 1.5 pence would really delay the upside scenario. Bulletin, another stock which has been rather frustrating over the recent past. Really this drift from the spring of last year back below 20 pence. Very frustrating indeed, but does look as though we're in a falling wedge bullish formation now, and that idea is backed up by this quite strong rebound that we saw at the end of last week. Multiple rebound points off this uptrend line in the RSI window as well. Towards the oversold 30 out of 100 level, and the breakback above neutral 50 for the end of the week as well. So as little as an end of day close back above 21 pence, and this October resistance line could take the shares back towards 26, 27 pence and the 200-day moving average over the next month or so. Moving along to Frontier Resources, a stock which has been another frustrating situation for the bulls. We had the big gap down in July last year and really drifted ever since. But in RSI terms, we've got this very sharply angled uptrend line for the oscillator, and also this nudging of the 50-day moving average at 0.08 pence. Likelihood now is that an end-of-day close above 0.8 pence should be enough to trigger follow-on move to test the main resistance of the last few months at 0.2 pence plus. Stop loss on the bull argument at the moment back below 0.05 pence. Sirius Petroleum is next, and you can see that there's been the big breakout through the 50-day moving average, 0.27 pence, and really while we're above that, the stock should have enough momentum behind it to retest post-November resistance towards 0.45 pence. At this stage, only really back below the 20-day moving average, 0.23 pence, would be hinting that there's something awry with the recovery argument here. Finally, Extract Resources. And this, in common with the theme of today, has been a frustrating situation. We really had the break above the 50-day moving average as long ago as December. That's at 0.2 pence, and the share should really have kept going after that. But we've had a couple of, or even 3 bear trap rebounds below the 50-day line, and another bounce off it at 0.2 pence last week. Good bouncing off the RSI uptrend line here from November, so that should finally provide decent momentum for the shares. Initial target, the 200-day moving average at 0.25 pence. After that, the top of this rising August trend channel at 0.4 pence. If you're cautious on the shares, as many might be now, you'd wait for an end-of-day close or even an end-of-week close above the 200-day moving average before going long. That's it from me. More updates at the same time tomorrow.